Welcome back. In this lecture, I want to make sure that you understand the difference between the retail traders and the smart money mentality. Let's first discuss about the retail traders. You will find retail traders trading based on some indicators and chart patterns like wedges, triangles, head and shoulders, etc. You will also see that they trust resistances and supports and trend lines blindly. You will also find some retail traders trading based on some candlestick patterns like hammers, shooting stars, dodges and engulfing candles, etc. 99% of the traders that you find online trade based on this retail mentality. When I started learning how to trade, I used to follow some influencers on Twitter and used to watch their YouTube videos. I'm sure that many of you do the same as well. But very quickly I started realizing that the trades or the examples they show in their YouTube videos are cherry picked from the charts. The strategies that they share work sometimes, but majority of times they fail. On the other hand, we have smart money. By smart money, I mean the banks and the institutions who invest billions of dollars in the market. We call them market movers also because they are the one who actually are responsible for moving the market. Before we proceed towards the chart and I show you some real examples here, let's first discuss about the concept of liquidity. Liquidity is ease of buying or selling. If you want to buy a certain cryptocurrency or stock, there has to be a seller on the other side and vice versa. Now imagine that you are a bank who wants to buy with $1 billion. How hard it will be if there is no liquidity in the market. That's the only reason you will find smart money hunting stop losses of the retail traders so that they can buy or sell at premium or discounted prices. For us, it's very important to know that what will be the next move of the smart money so that we can assess the market direction and hence take profitable trades with high risk to reward and win rates. This concept will clarify further as you will proceed with the course, but let me take you towards the chart and show you some recent price action so that you can see how these market movers move the market to hunt the liquidity. So the first example that I want to show you is a coin called Solana. I have opened the USDT pair of Solana. As you can see that if we draw some trend lines, we can clearly see that the Solana is moving in a channel and it is a descending channel. And if we talk about these pattern tradings, descending channels, by the way, break always to the upside according to the retail traders, and ascending channels break to the downside according to, again, the retail traders. So what I mean by that is that if price is moving in a descending channel, you will see it going something like this, and what they expect is that this always break towards the upside. On the contrary, if the channel is ascending, you will see that retail traders trade it something like this, that this ascending channel should always break towards the downside. So they take a short position here and they take a long position here when it is a descending channel. If we take our channel tool again, you can simply draw some straight lines, but just to make it clear, I'm just trying to make it a channel here. So as you can see here, this, by the way, retail traders call this as fake out, when the price comes down a little and then moves higher. Now if we see this, there definitely is rejection at the top for this channel. So if you are trying to short it, you will definitely short it whenever the price goes near to this upper line that we call as the resistance line of this channel. On the other hand, those people who are trying to long it, they know that if the price comes down again, they will long it because we clearly have some rejections down here and we are forming a channel. So what we are expecting if we are a retail trader is that this should break towards the upside. So I will just play the price. As you can see, we got clearly a reaction here. So when the price touched this lower line, it printed very strong green bullish candle. So this makes retail traders more confident that yes, the channel is holding and that we are going to break towards the upside. So where will be the stop losses? Well, as we discussed, if we trade based on this channel pattern, we put our stop losses just below this trend line. So here there will be lots of stop losses, millions and billions of dollars resting here. And remember, these are all the sell stop losses. By stop loss, it means, in case you are not aware, that you are taking the trade here, but you are moving your stop loss down here so that if the price comes down here, you will automatically sell. So let's see the price action. So this is the latest price action. As you can see, the price moved down very aggressively taking out all the stop losses. So all retail traders are out right now. All right, let's take an example of ADA, Cardano, very solid coin, of course. And as we can see here, Cardano, again, if we join the lows and we join the highs, we definitely can see that Cardano is kind of a, a descending triangle kind of pattern, or you can call this as wedge as well. And when this forms, what is expected normally is that because this is bouncing here, it bounced here as well, then it was rejected here at the top, it bounced here, printed very strong bullish candle. And now what retail traders do is they wait for this upper line that we call as resistance to break, and they will take the trade. Some retail traders wait for the retest and they take the trade here because they think that the trend line has been broken and now that the price will move higher. Now let's see what happens. So if someone takes the trade, if this lines break, let me just change the color so that we are clear. So this is a resistance line, and we definitely bounced off this lower line, the green line, and now we are trying to break this upper resistance. And let's just play the price. We definitely broke it very heavily with couple of huge green candles. Now the retail traders, they are definitely in when this broke the resistance, or there are some still who are still waiting for the retest. Retest is when the price will come down and it will hold this upper resistance. That's where retail traders enter or they re-enter. Those retail traders who entered here, they definitely have their stop losses resting below this trend line. So we have stop losses here. Let me just delete this so that we can clear up the screen. Let's just play the price and see what happens. Now, as you can see, the very next candle, they definitely took all the retail traders who entered here. But now you can see that this is holding quite nicely. We see a very long wick. That means that there was rejection, a strong rejection. So those retail traders who were waiting for the re-entry or for this to retest and hold, they would have definitely entered here. But immediately after that, what we saw was this. So despite of breaking this resistance quite heavily, they actually took out all the retail traders and moved down. Now let's move towards the big boss BTC, and the recent price action, we saw that BTC actually broke the top. So those retail traders who were actually waiting for this top trend line to break, they actually entered. Also, we see that BTC is in in a pattern. It is creating a higher highs and higher lows. Also, we see this trend that it is holding this trend line nicely. Now let's see that what BTC did next. So we saw this huge green candle. This candle, I remember, brought some very high volume with it as well. And those retail traders who actually are the breakout traders, they definitely would have entered here because BTC broke the top. And where would they put their stop losses? Well, some will put just below this top red line, or those who want to take some more risk, they will put the stop losses just below this previous low, right? That's how they trade. So let's see what happens next. So BTC broke the top quite heavily, but immediately after that, we saw that BTC came down quite heavily, taking out all these retail traders. Now these retail traders are definitely out of the market, but now immediately after that, this price action, we saw that BTC started to hold this trend line quite nicely. So those traders who trade based on the trend lines, where they will enter definitely here upon the rejection, this huge green candle, where they will put their stop losses just below this trend line, definitely. Now let's see what BTC does next. There you go. So very heavy downward moves BTC did, and we know now that they have taken out all the stop losses. Now retails have their eyes here. I can tell you definitely that this is very strong resistance. What I expect is they will bring it down. They will show some rejection here, pretending that this is the bottom. But then again, there will be a huge red candle taking out all these stop losses as well. So I hope you get the idea that how smart money move the market and take out all the stop losses of retail trader, and why they do that, because they want to buy definitely at a discounted price. If you are a bank or institute who wants to invest $1 billion or a couple of $1 billion in the market, you will definitely never put it here. In fact, you want to buy at a discounted price, and where you can buy, of course, where there are stop losses of the retail traders. That's where you will find most of the sellers, so that you can buy at the discounted price. So let's move to the next lecture, and I will show you some very recent price action, some funny stuff in fact, and I'm sure you will like that lecture.